hard-coded, mechanically tradable rule sets that apply good principles but in a very strict way. So strategies, specific systems. We'll look at techniques, which are, I think of as modules. They're like concepts or processes or a procedure that applies broadly to systems and strategies. So just good things to do, good habits of mind. And then tips, just good things to know we've learned along the way that just seem wise. We'll spend some time in systems, self, and markets. So systems are basically the methods that we're going to use to try to extract value from the market. We'll think about the market as the playing field, markets and submarkets and sectors and targets, lions and tigers and bears. And then self, we'll take a look at the some psychological elements. And when I say psychology, mostly I'm talking about managing yourself and cultivating the habits of mind of a craftsman and approach the work like a serious person in order to accomplish things in the world that matter to us at a deep fundamental level, whatever those are. And however you access that, well done. We got to do things about that in the world. So, so that's how I think we're going to get to most of that. We may get to all of that. Whatever we don't get to, you have an unlimited free trial for life. So, you know, take your time. Don't worry. Yeah, so I like to think of this as an ecosystem. That's going to be one of the themes of this weekend, is the idea of an environment in which we are operating with ideas and allies and resources, and there are different places that we can go to find value. And so the ecosystem is sort of a holistic approach to understanding the environment and your place in it and the things that we can do. So you'll probably hear me talk a lot about that. So that's the menu that we'll use to build out the day. So I hadn't seen RJ for a while, so I said, he says, "What's new?" I said, "Well, this is kind of new. This is Home Depot. It's for the last 2 months. It's been the strongest performer in the Dow. This is daily charts. I want you to just notice that orange ribbon. That is the dragon. That's the 10-period Bollinger Band plus or minus a half standard deviation. A 30-period Bollinger Band plus or minus a half. Did I say I'm sorry, the 10-period. And Home Depot is a nice thing to trade on swing trades and day trades. Intraday, it's great because we're here for day trading, because it has a high signal-to-noise ratio, meaning that the moves intraday are more directional than the average member of the Dow. So when it moves in a direction more clearly than other things which are noisy. So it has a high intraday signal-to-noise ratio. It has a lot of volume. And it's also nice on a swing trade basis because it has these long, orderly moves that last multiple days. And so if we can find turning points at places where it wouldn't surprise us that it actually was a turning point, then we may be able to frame a very nice swing trade in there. And then each day when we go into the market and we see that thing moving in the direction suggested by the higher time frame, then we can get in quicker with less doubt, or just enough doubt to be able to act with anxiety, which is important. And then we can stay connected to that directional move on the swing basis, and as long as the day trade is moving in the direction of the swing trade and Home Depot is outperforming the other members of the Dow and the market is strong and going up, that's the lowest risk trade of all. That's core and turbo, the principle, the strategy that says information can come from the other time frames that influences the way we act, and so we should be mindful of the higher time frames and lower time frames because people are acting in those time frames. Even though we're looking at our preferred time frame, it may be that other people have different ideas. That's entirely possible. And when they act on their time frames, that price manifests in our time frame. We wonder why things are happening. It's, well, because of reasons. All I need to know is that it is moving, and I know the dimensions of how it can move, and I can frame trades that give me favorable reward to risk ratios, preferably in both directions, so I don't have to figure that out, right? So Home Depot is a really nice candidate because it intraday big moves that are directional, swing trades that are long and orderly, and it is the opposite of a fancy, groovy, sexy growth stock that has news moving it around all the time. It is really operating based by a bunch of old fat guys with supply and demand and trying to balance their positions, and everybody's got to own it. And when the real estate sector is doing well, that's a good defensive sector compared to the rest of the market. And so if the market is suffering but real estate is going well, Home Depot usually does pretty well because people are buying stuff to fix their house, to add value instead of speculating in the market. So it's the opposite of all that groovy, sexy, high-tech, news-driven stuff. It's pure supply and demand, so I like it for that reason. Oh, Caterpillar is like that too. You know, they make big machines that move Earth, that build the world. So it's not unusual to see Home Depot moving in a way that's different than the market and better than the market. And when it is, that is a nice low-risk way to find a good target. And if I can find it on swing trades, since I'm interested in swing trading anyway, not only is that actionable on a swing trade using standard techniques, like all of these indicators that's exactly the same dashboard that I'm using for intraday trading on 1-minute charts. That's the same dashboard that I'm using for monthly charts and looking at very long-term time frames. So the fractal nature of the dashboard allows us to have a standard set of readings and interpretations and decision-making and trade framing strategies, and it's independent of the time frame on the targets that we're using. So there's a certain efficiency in that. That's going to be one of the themes and messages of this ecosystem, is that trade systems themselves, the signals that they generate, are not only actionable, but they also provide information. There's information content in signals. So when we look at the dashboard and we're trying to get the readings of what's going on in the world, when you have things that are actionable but also information, then that's very efficient. So Home Depot right now, I look at this and I say, now imagine I was about to record what I'm about to say. I actually did that yesterday because I was talking to RJ through this, and the more I looked at it, the more I liked it. I said, doggone it, I should be recording this. So I went ahead and recorded it. So the video of what I'm about to say is also available. I'll show you where to get that. But when I look at this, I notice, well, first of all, you see that big green dot right? This is me forever. This is me in my happiest moment. After a period of pain and suffering, when the MACD histogram crossed the zero line and I have a negative bias, and then it can't get negative and it crosses its own little 5-period moving average alert. This red river is a 30-period Bollinger Band plus or minus 1 on the signal line. So this is a RLCO type of a framework. The same thing that I use up here directly on price, just put that on the indicator and you get a very smooth and orderly reading. Where I like to be on the curve of the 4 seasons of MACD histogram is, well, it's in the fall because it's above the zero line but the slope is negative. So it's had the moment of joy. Yay! And now it's starting to roll over. It means it's not going up like it was before. It may not be falling, it's just running out of steam. So summer, fall, winter, spring, summer, lather, rinse, repeat. And so where I love to be on the curve is this moment here. After a observably bad period of time here in the winter that's south of the Red River, this is a signal. When the prices, or when this MACD histogram is inside that little Red River, there's some noise in there too. That's a normal period of oscillation of what's going on. But when signal lines break out of their Bollinger Bands, then it's more signal and less noise until it gets to a real extreme, and then it's all signal. So when this went into the winter, into the spring, entered the Red River, alert, and that's when the season changed from winter officially to spring. There's an owl. You will always find owls when winter goes into spring, and look up, you'll see an owl. So the owl is a relaxed, wise way to enter positions that are about to reverse. It is a warning of a probable turning point in the market on the larger time frame. So there's these criteria. Unambiguous move down. A P1, which is an RLCO outside the river. RL10 crosses the dragon, that's the RLXD. The dragon slope, the belly start to roll up, and the 30-period regression line has rolled up. Those 5 criteria are the owl. Now there's enough information that this thing has actually started to turn that you can frame a nice trade. So I buy the next breakout north of the dragon, use the bottom of the dragon as a initial stop. You could use the PSAR if you want. So there's my initial execution risk. My execution risk is small. It's about like 2 fingers. Actually, it's almost just 1 finger, so that's like $3. So $3. Yeah, when I measure that carefully, it's $2.57, so $3. Always err on the side of less risk. When you use rounding factors, round it in the direction of take a smaller position, we can add more later, right? So $3, and we're buying it at about 192. It started to hesitate, but then didn't even get into the dragon and then continued. That's a pocket, second position, $3 stop. Oh, it failed to fail again, third position. Now it gets well out of the river, past the Z2 line, the floodplain. It's between Z2 and Z3. That's unusual behavior in a big symbol. So we got a reverse, or a negative move, and it started coming back, and I felt like I got 3 positions in this thing. The market was horrible at the time. Cash. Worry about it later. On this kind of a move that was such an extreme, and an extreme move here you can see, and it starts to roll over, a move back to the Bollinger Band mean is the least surprising move of all. You are not allowed to be surprised if something reverts to the mean, because that's what the world does. When things get out of control and starts correcting back to normal, normal is the middle of the Bollinger Band. The Bollinger Band mean is normal behavior. So if this extreme move in this direction were to come back to this red line, that would be the least surprising move of all. Check or hold? Check means got it. Hold means need more explanation. So if I say check or hold, you actually don't even have to say check, because I'm going to assume that I was perfectly clear. But if you need me to say more, you just say hold, then I will reply. So just I'm thinking the syllables that we're going to save. So I'll say check or hold, or I may just look and say, and then that'll launch me into a more elaborate and less clear explanation. So cash this one, because why not? Because I'm actually protecting against the risk of a reversion to the normal. And if this had moved all the way down to here, these 2 positions that are in the money are out of the money, and if I let it come back to the Bollinger Band mean, although this one is in the money, that's a losing position. That's probably minus 2R if I let it come all the way back. So I don't want to lose 2R. Yeah, that's right, I don't want to lose 2R. So the exit has the same reward to risk ratio as the entry. When I'm framing an entry, I want to see 2 rewards to 1 risk that I'm interested. And then when I'm thinking about profit preservation, I'm thinking about, well, I'll let it come back 1/3 of my profit maximum in order to preserve 2 units of gain on the least surprising move. So there's a 2-to-1 reward to risk ratio on the exit as well as the entry. So if I'm stalking the entry with great care, then I should stalk the exit with great care. Oh, even greater care, because now I get skin in the game, and there's going to be an emotional consequence to that decision. So if I only have 1 unit of time to work on something, I'm working on my exit technique. Because I have skin in the game and it's emotionally charged, and that's the decision that defines the return of that trade, which is then going to inform the histogram, which then informs my bottom line. That's the one that matters, because I get emotions in there. On the entry, this is a speculation anyway. And in fact, on the entry, I've already emotionally felt the loss of my risk capital on that one. I just embrace that. Let me just feel what a 1R loss feels like as soon as I put the trade on, because I know I'm wrong, and it's going to be proven out yet again that I'm going to lose an R, and I know how that feels. Oh, and I can handle that because I'm a professional. Well, if that's the worst thing that ever happens to me in that trade is the feeling that I already felt, what a freeing state of mind to be in for all future decisions in that trade. Because I've already experienced what it felt like to have the worst possible outcome, which is a -1R loss. So anything better than a 1R loss, I made money based on my feelings. So if this thing starts coming back and I decide to cut it at a 1/2 R loss, I made a 1/2 R. And I feel like a 1/2 R good to offset that horrible feeling I had before. If I just scratch and break even, I made an R. At least I got my capital back. If I can make no lose plus dinner for 2, I can make just enough to cover my round trip and $100 so I can take my wife to dinner in Kansas. $100 goes a long way in Kansas, you know. Then that's good for me. I mean, that's not a bad day at work. I get to, I avoided the 1R loss that I already felt like I had lost, so I feel like a winner. I get to take my wife to dinner, which makes me feel like a winner. Actually makes me a winner. It's not just feeling like a winner. I am a winner because I traded up really well on that one. Above my social and moral class right there. She's a saint. We might have to edit some of that too, because it sounds like I'm eating cheese. So the point being is that when I make this exit, it's all part of that's the most rehearsed decision I ever make, is how to get out of positions. That's where I spend my time and energy, is figuring out how to adjust my stops, when to get out, and how to get back to the 0 state immediately. Well, I'm always in the 0 state at the moment of exit because I've already experienced the worst possible thing, and this is better than that, so I don't feel horrible. I don't question myself anymore in the moment, because that's what analysis is for. Studying results of a large data set that lets me know how well those decisions are tuned to the market. But in the moment, that's my exit, and I have more important things to do than worrying about it. I have to be ready for, am I stopping and reversing? And where am I going to re-enter? Oh, I already know where those decisions are at the moment of the first trade, because when I framed the trade, I asked myself all of those questions for every decision that I will have to make after I enter. So where do I get in? How far could it go? Where will it stall? If it stalls, where am I going to get out? And if it stalls there and I get out, would I stop and reverse back to my entry? Or if it then reverses as soon as I get out, where do I get back in? Where do I add a second position? If this thing fails and I'm short, where's the next move? And how far could that go? Once I've asked all those questions and answered it and put that on a trade frame, I've already envisioned the next round of decisions that could come from my decision to enter. So I'm going to enter, and then there's about 4 other decisions I'm going to make after that. So put that in the original trade frame. I've already rehearsed that and seen it and practiced it and trade all my trades that way. So when I come into a moment of hesitation, I've already rehearsed that decision routinely. That's not the time to start thinking about what to do next, is when you're in the middle of, you get on a bull, that's probably not the time you want to start thinking about, is this really my line of work? How am I going to get off of this thing? You should probably know that before you get on a bull, in my opinion. You might want to practice that a few times on baby bulls. I'm not a bull rider because I appreciate horsepower to weight ratios and all that. So this decision, routine, it didn't fail back to the normal one. In fact, the RL10 immediately reversed and started coming out of the dragon, so buy it again. But Ken, you just got out of it. You could have, look at what I didn't even look at what I lost. It didn't fail further. The pocket re-entry had a successful owl with 3 scoops and money in hand, and it signaled to the north again, so get back in. Yeah, but you just got out 5 seconds ago. Yeah, well, 5 seconds ago, the world was different. I don't know if you've noticed, the world changes fast sometimes. So it's the price level that gets me in or out. It cleared the hump of the 10 and didn't fail through the dragon again to the Bollinger Band mean, so just re-enter. Comes up here after a little doji. That was enough. Second leg up, had 2 positions in. That's pretty good, and this is really an extreme move now. Look how wide the Bollinger Bands are. So a move back to the Bollinger Band mean would be the least surprising thing of all. And when it crosses that, look out below. Oh, that's also when the summer went into the fall, and now winter, horrible. Oh, not so horrible. The spring, out of the Red River, owl, buy it, use the bottom of the dragon as your initial stop. That's a $5 stop. Off it goes. Lather, rinse, repeat. Yes, sir.